Hey all, welcome to Share Trek. This is Raj here. Friends, in my mind, I have the thoughts about the interest rate hikes. First, I want to do a little bit of a rant and about Canada, and then get on with the interest rate hike and what it means for the genomic companies, the biotech sector, especially. I'm looking at data points that have already emerged that show a lot of distress in the biotech sector, and we need to be aware of this. So that's what I want to do in the video today. Let's get started. Welcome back, friends. Out here in Canada, we have a very strange economic system. Please don't get me wrong. I love the country. I love Canada, and I've had a great life so far in Canada. But things are not getting any better because we have a strange mix of situation. During COVID, of course, we had a lot of largesse from the government, and then the government has opened up immigration. Canada is allowing immigration, which is more than entire United States put together. So you can imagine the amount of pressure that's going to be on the economy. On one end, we have the Central Bank of Canada ratcheting up the interest rates and putting a lot of pressure. Many people in Canada, most of the Canadians, all the Canadians have mortgages that renew in 3 years or 5 years. It's not like US, where you have a fixed term for 30 years. Our terms are for 3 years or 5 years or 10 years, you can select, but most popular terms are 3 and 5 year terms. And the amortization maximum is around 30 years. So as the central bank keeps on increasing the interest rates, we have the scepter of people who had a nice mortgage at 1.29 or 1.5% coming up for renewal anytime now. And when they come for renewal, they are going to be qualifying at around 6.5% or 5.8%, something in that range. And that's going to be a steep hike in their monthly payments. Already some banks have adjusted by increasing the amortization to 45 years. Some banks have allowed interest-only payments for mortgage in order to tide over. But one of the main problem is it seems that the government is totally insensitive to this inflation. They are allowing such huge immigration, and it's causing two problems. Immigrants are coming with money because they want to settle down in a foreign country. So that money is continuing to fuel all the essential purchases. Imagine an immigrant comes with maybe $20,000 or $30,000 in hand. The first thing they have to do is get a place. The second thing they have to do is put food on the table. The third thing they have to do is travel and try to find a job and get started. And then if they have kids, they need to provide for the school education. So these are all mandatory expenses. Most of the money that the immigrants bring is going to be mandatory spending. And that's stimulating the economy. We are going to invite 400,000 odd legal immigrants. This does not include refugees and students and others. So these immigrants are also going to bring in the money. And then our government has also given grocery rebate of $500 to select families. So there is a good section of the society who is going to receive $500 as a grocery subsidy. Now that's again going to feed into the necessities, and it's going to push the food prices up. So on one end, the central bank is trying to tighten the interest rates and trying to curb spending. On the other, the federal government is going in the wrong direction. In my opinion, it's working at cross purposes with the central bank. And what's going to happen is that we'll have a foreclosure crisis if this continues. And the other problem is that as the mortgage rates go up, landlords are finding it very, very difficult to invest in rental properties. So many are getting away from that. I personally have rental properties which have got negative cash flow because mortgage payments are higher than the rents that I can get. And rents in Toronto are quite high, my friends. It's pretty high. If it goes any further, we're going to have trouble getting tenants. We have situation in Toronto where people rent a 3-bedroom condo and there are 2 people living in each of those bedrooms. Those kind of things are not rare. And that basically means that we are turning the city into a ghetto. And on top of it, we have a new mayor who has been elected from a party called NDP. NDP is totally socialist, and she has promised to increase property taxes so that she can take care of the housing crisis. I don't understand how things are going to work. 30% of builders' levies is municipal costs in Toronto. And after the builder has paid that 30%, now the requirement is they have to do inclusionary zoning, which means they have to have subsidized housing, a certain number of units of subsidized housing in the building. That cost is also going to be paid by people who are buying the units with full payment. That's where the subsidy is going to go. So the price is going up. And on top of it, when somebody buys a property in Toronto, they have to pay land transfer tax. And this land transfer tax is also a significant amount. And after that comes the property tax, which is again something that the municipal commissioner is going to, the mayor is going to increase. So it's a no-win situation, and the tax slabs are up to 40% in Canada. So out of your salary that you make, you pay 40%, and then you have a HST of 13%, harmonized sales tax on anything you buy. So you pay income tax, you pay consumption tax, then you have to pay for garbage collection and recycling, then you have to pay for water and sewage, and then you have your property taxes. So this is a no-win situation, and those who have made it are and have retired, like a person like me who is retired, we are finding that the government is trying to push us out of the margins, and maybe we'll have to sell the house and downsize and go to the outskirts somewhere where there is no medical facilities. So things are bad, and don't get me started talking about free medical, because free medical is a joke. When you go to the doctors here, they prescribe you a Tylenol or something. They don't do anything serious. When anything serious happens, you need a specialist. The wait times can be anywhere from 3 months to a year. Right now, I have some kind of a growth in my gum, and I went to the doctor, and I don't even know when I'm going to get the specialist. I have to see an oral surgeon, and I don't know when I'm going to get him. So I'll see after a point of time. I may just take a trip to India and get it done right away, because if it is something bad, I don't want to wait for 10 months for them to find that it has got worse. So this is the situation in Canada, and that was my beef for today. Now coming back to the interest rates, let's talk about our genomic investments. Friends, it has been terrible for the genomic industry and the biotech industry. The Fed did not hike rates yesterday, but warned that it would, if needed, it may potentially have a quarter-point rise very soon, could be in this month itself. They have projected 2 more rate hikes, so it's a daunting scenario ahead. Meanwhile, as I try to make sense of what is happening, I think that the bottoms-up financing done during the COVID-19 pandemic is to blame. Also to blame is the supply chain issues and trade war with China, and of course the Russia-Ukraine war, because tons of money is getting pushed into Russia-Ukraine war in terms of weapons, in terms of other support, and in terms of pure cash being pumped in. Now all of that is coming back into the economy, and it's causing resources to be strained. And I'm afraid that we may have a sectoral recession if there are more rate hikes. Traditionally, recession is seen as being for the whole economy with 2 consecutive quarters of negative growth. However, when I say sectoral recession, I mean companies letting go of people, a drop in market capitalization, and difficulty in funding initiatives. And this could happen in a particular sector. Biotech companies faced a tough time in 2022 as over 7,000 employees lost their jobs in the biotech sector. The situation continued in January 2023 with the sector reporting 1,449 layoffs compared to only 174 in the same month the previous year. As reported by the Wall Street Journal, those were the statistics. Throughout this year, 19 biotech firms have already announced a reduction in their workforce. This trend is not limited to biotech alone, as many pharmaceutical companies also are implementing similar measures. These layoffs and company closures represent a significant change for biotech industry, which has historically shown resilience in securing funding. Here's a list of biotech companies that have laid off employees in the last few months. So here is a list of companies that I have been able to take out from the web. In July, Zymergen let go of 3 employees. Nutcracker Therapies let go of 12. Thermo Fisher let go of 88. Twist Biosciences had a huge layoff of 212. Greenlight Biosciences 96. Oncorus 55. Catalent 150. biotech companies that have let go of people. So there has been a lot of layoffs that shows the strain in the system. Here are a few factors that have caused headwinds to the biotech sector, in my opinion. The first is the raising interest rates. The biotech industry's ability to attract funding seems to have diminished as it has become riskier, while fixed income products offer better returns with lesser risk. And also, many people are buying fixed income products at this point of time in order to get capital gains as well. Not only will they get higher interest, but as the interest rate falls, bonds are going to appreciate in value, so that people pay more money to buy those bonds so that the returns match what is the new reduced interest rate by the central bank. So that is a twin purpose for which it becomes very attractive to put money into fixed income like bonds in order to get higher returns with less risk, with also the potential of capital gains when the face value of the bonds goes up. So those are the things that are driving investors more towards secure high value returns as compared to investing in the highly risky biotech industry, which is still in the process of finding solutions, getting it approved by FDA, and then monetizing it. And again, most of the times these therapies are very expensive. So the risk factor when compared and contrasted with the relative security and higher returns from bonds and fixed income securities seems to be more attractive. So that's the first reason. The second reason is difficulty in developing profitable products. Some profitable, promising technologies such as cell and gene therapies look good on paper, have proven challenging to get across the FDA approval and turned into profitable products. You have seen how much Bluebird Bio had struggled to get Zynteglo out, and when they managed to get an approval in EU, they had to back out because the pricing was very high. The reason why the pricing was high is because the production capability and other things cost money, and the amount of time and energy and infrastructure needed to complete the research for cell and gene therapies has been very high. But as time goes by, technologies will become cheaper. But right now, that is one of the other factors which is hindering biotech companies and genomic companies. The other factor also is the political tensions between the US and China. Uncertainty resulting from political tensions has affected the industry's outsourcing of manufacturing and drug development, leading to increased concerns over supply chain disruptions and potential delays in drug production. Meanwhile, Chinese biotech companies are thriving. They are doing extremely well, and they are working within their economy. But in the US, it's definitely become a problem. And finally, the Inflation Reduction Act, which is a new federal law allowing Medicare to negotiate drug prices, is another recent factor which creates uncertainty around the extent of potential discounts and reduction in profits for the industry. Of course, one perspective is that more people should get medicine at a more affordable price. But at the same time, the big bonuses in the pharma industry and the big dividends that are expected by stockholders based on the current regime of high-price drugs is changing. And there is going to be resistance to the change, and it's going to be a lot of withdrawal symptoms as lower prices are negotiated, and the pharma industry becomes more attuned to smaller dividends and lesser costs. So all those factors are going to be a matter of struggle at this point of time. The churn is going to continue. Either we get a Republican administration which comes and repeals all these acts and allows a free hand for the pharma industry and the biotech industry, or the continued focus on delivering good quality medicine at affordable price to maximum number of people continues, in which case pharma industry will have to either increase the productivity and reduce the cost of manufacturing in order to safeguard its margins, or it will have to reduce the margins and reduce the dividend payouts. So these are the factors that are at play, in my opinion. And of these factors, the interest rate hike is transitory and will be gone over a period of time. As CRISPR and Blue get approvals by the end of this year for their therapies, Hexacel and Lowocell, there will also be big pharma gene therapy available, which are also taking place in terms of FDA approvals happening in parallel. Recently, I showcased gene therapy from Pfizer, and I think I had one more gene therapy from another biotech major. So progressively, profitability will not be an issue, assuming that big ticket price will find willing payers. It's a matter of time before everything gets adjusted. The other two factors that I mentioned do not seem to have an end date in sight. We do not know when the China-US trade war will end. It's only getting worse with Chinese embargo on rare earth materials, which is a part of the silicon wars. And with a Republican dispensation, the Inflation Reduction Act may potentially go away. But for that, we have to see the Republicans win. And with Trump being the lead candidate, I don't think that's going to happen. Trump may win the nomination, but most of the people are frankly scared with giving him the reins of power again. So if the Democrats continue, they're going to continue with the same policies that they have had. And the Inflation Reduction Act will be continuing. And that's going to bring more and more drugs under price control. And that could be difficult for the biotech sector. And when it comes to waning funding prospects, here is some sobering statistics. Biotechs raised 1.57 billion through IPOs in 2022, which is a significant decrease from 16.5 billion raised in 2021. According to statistics published by Wall Street Journal. The traditional path of raising money through venture capital and institutional investors, followed by going public, has become more challenging. Venture capitalists are now more cautious about investing in mid or late stage privately held biotechs. As genomic investors, we need to be patient, and it is possible some of the promising genomic companies with weak financials but great intellectual properties or therapies which are very close to FDA approval may get taken over by big pharma. That's what is likely to happen. So friends, that's my read on what's happening with regard to the overall environment, economic environment, the interest rate hikes, the potential interest rate hikes, and how stretched and stressed the biotech sector is, and how stressed the genomic sector is. So please let me know what your thoughts are in this regards. And do you think that we are going to have an end to these interest rate hikes maybe by the third quarter of this year? Do you foresee reduction in interest rates probably in the first quarter of next year? Please let me know in the comments, and it will help me also refine my own viewpoints and thoughts. Well, friends, that brings me to an end of this video. If you have not yet subscribed, please subscribe and help us grow this channel. And please do not forget to put your comments. I would really love to hear from you. And with that, I would like to end this video. Thanks and have a great day. Bye for now.